Hi friends. So our today's topic is segment reporting. So what is segment? Here we are concerned more with operating segments. So I'll tell you like segments can be bifurcation of a company on the basis of it may be on the basis of geography, or it may be based on products. Geography means like one division, one segment is in US, one segment is in UK, or product means let's say one product is product A and one product is product X, so it can be based on product also. So let's read out further. First is operating segments. So we are concerned more about operating segments in here. And what is operating segment? A component of an entity that has all of the following characteristics. So the catch here is it should contain all of the following characteristics: engages in business activities, operating results are regularly reviewed by the entity's chief operating decision maker, regularly reviewed, and then discrete financial statement is available. So what is the meaning here? So engaged in business activities means it has the segment has its own revenue and expense. So if you take this segment out, you would know you should know that what are its revenue and what are its expenses. Then it should be regularly reviewed by CODM, and it should have its discrete financial statements. These are the main characteristics of an operating segment. Some other points would be that corporate headquarters and pension plan do not are not operating segments. Because why? Because corporate headquarters do not have its own revenues, and then pension plan is does not have does not engage in business activities. Then moving ahead, reportable segments are operating segments of an entity that meet the criteria for separate reporting. So the criteria we'll be discussing in the following slides. Now, overview of segment reporting. Under segment reporting, an entity is required to disclose segment profit, segment loss, segment assets, and certain items of its operating segments which meet the specified criteria. So the disclosure is segment profit and loss, segment assets, and the definition of operating segments we have already discussed, and the specified criteria we'll be discussing in the following slide. So it is not required. So this is an important point. It is not required to report segment cash flows. So reporting of cash flows is not required, and reporting of segment liabilities is not required. Segment liabilities is required under IFRS only. So we are covering IFRS also here. Then it provides better understanding of an entity performance and assess its prospects for future net cash flows per segment wise. So the segment reporting helps company to assess which segment is performing better and which segment is not reporting good, and company may decide or company may make future decisions related to those segments. Then points to note here is use of so segment under segment reporting, the accounting principles should be same as the accounting principles of financial statements, and then intercompany transactions not eliminated. So what is the meaning of this? So let's say there were two segments, segment A and segment B, and some goods were transferred by segment A to segment B. So in that case, segment A should book revenue from segment B, and then segment B should book cost of goods to its financial statement. So the intercompany transaction is not eliminated when you are reporting segment wise. And last is the segment reporting is applicable only to public companies. Then moving on, reported information must disclose about companies operating segments, companies products and services, companies geographic areas, and companies major customers. moving on. Now, what is the criteria? So this criteria is called 10% size test. What is 10% size test? We have to check on whether there is any segment which has more than 10% of total revenues of company, total profit or loss of the company, and total assets of the company. So let's discuss this. So how to calculate revenue? So the important point here is segment revenues including both sales to external customers and internal segmental sales or transfers is more than 10%. So here, like, internal sales should also be considered, internal segment sales should also be considered. And if total of external customers and inter-segment sales is 10% or more of company's total revenue, then it will be a reportable segment. The second criteria is reported profit or loss. So absolute amount of segments reported profit or loss is 10% or more of the greater in amount of total profit or loss of all profitable segments or all loss-making segments. Let me explain this to you. To calculate this, first point we should look into is we should uh, assess the absolute value of total loss, total of sorry, total of loss-making segments. And then second is absolute value of total of profit segments, right? So out of these two, you will have to check the greater of. So whichever is greater should be considered for the criteria of reported profit. And then if any segment has 10% or more of this, of the greater, 10% or more of the greater should be a reportable segment. Then for assets, the segments identifiable assets are 10% or more of the combined assets of all operating segments. So this is easy. Then moving on to next criteria. So yeah, if any one of these three criteria is exceeding 10% for any operating segment, then that operating segment becomes reportable. So there are some additional points. Let's see the first one. The total of external consolidated revenue reported by the operating segments should be equal to or more than 75%. If not, then additional operating segments need to be identified as reportable segments. So I'll show you how a segment report looks like. So it would be more like different segments are divided, and this is segment A, this is segment B, this is segment C, and at the end it will show all other segments combined. And here you will show the total revenue, then you will show profits, then you will show assets. So this is what a segment report looks like. So what this point is saying, that all the reportable segments, that A, B and C, should have at least 75% of external revenue. So it does not include internal revenue, right? So it should have at least 75% of external revenue. And if it is not having 75%, then we will take out one or more segments from this and try to make at least 75% of revenue reportable. So even if we have to take the segments of less than 10%, but we will make it at least 75% of external revenue. Then moving on to next point, all other segments category should be combined and disclosed in all other segments category. This I have already told you. Then moving on. Okay, the point here is if one segment is more than 90%, if a single segment is more than 90% of 90% of all the three criterias of all three criterias which we discussed in the previous slide, then no segment reporting is needed. Why? Because if only a single segment is considering 90% or more of all three criteria, then no individual segment will cover more than 10%, right? So in that case, we do not have to do the segment reporting. One note here. So how to calculate the segment profit? It is revenues minus directly traceable costs less reasonably allocated costs allocated by CODM. So this is a formula to calculate the segment profit. You have to learn this. Then moving on. What are the disclosures required? So first disclosure is disclose the revenue from external customer and long-lived assets that are attributable to or located in the entity's domicile countries. So we have to disclose revenue from external customers and long-lived assets that are attributable to or located in entity's domicile country. Attributable to or located in all foreign countries if the amount is material or countries in which the entity holds assets. So this is reportable only if amount is material, only if it is material. Then next is disclose the basis of attributing revenue from external customers to the individual countries and disclose the long-lived assets located in foreign currencies if located in foreign countries if the amount is material. If 10% or more of the revenue is generated from sales to a single customer, here it, it is considered major customer. So if more than 10% is considered revenue is generated from single customer, it is considered major customer, and disclosure of the amount of revenue from each such customer and the segment or segments reporting the revenue should be disclosed, but not that the identity of customer need not to be disclosed. So you do not need to disclose the identity of customer. Thanks for watching. If you understood the topic, please like the video and subscribe to the channel. If you have any questions, please ask it on the comment section. Thank you.